In this video, we will review the 4 ways to calculate federal income tax withholdings. We will begin with the pre-2020 W-4 form. Notice on this form that the taxpayer lists the number of withholding allowances here on line 5, and they also list their marital status here in box 3. So we're going to use this information along with the pay period to calculate the federal income tax withholding. So here's our first example. Francine is married with 4 federal withholding allowances. She earns a semi-monthly gross pay of $24.20, has 5% deducted for a 401k, and contributes $125 to a cafeteria plan. So the first step is always to calculate the taxable pay. So with federal income tax withholding, we should always subtract any 401k withholdings and any cafeteria or flex spending deductions. So we'll begin with Francine's gross pay of $24.20, and we will subtract $121 for the 401k. That's 5% of the $24.20. And then we'll subtract the $125 cafeteria deduction. So her taxable pay is $2,174. So we take that figure and move over to the wage brackets. We know that she is married and has 4 federal withholdings and is paid semi-monthly. So when we go over to the tables, we first need to make sure that we find the correct pay period. So we're going to scroll down until we come to the semi-monthly and married table. So we have semi-monthly single there, and here we have the semi-monthly married. So we need to find the $2,174 range. Okay, so that's $2,162 to $2,182, and we know she has 4 withholdings. So this is the 0 withholdings, 1, 2, 3, and 4. So for 4 withholdings, you'll see those at the top. Her federal income tax withholding will be $101. Okay, now let's move to the percentage method. We're going to use the very same information, and we will calculate the exact amount of her withholdings. You know, the wage brackets simply give you like an average type withholding. So when we calculate the withholding with the percentage method, we should get something very close to this 101. Okay, so we already know that her taxable pay is $2,174, but this time we're going to go over to the percentage tables to calculate her withholding. Okay, so back over to the same publication, and we're just going to scroll up to where the percentage tables are. There are a few more calculations involved. Okay, so the first thing that you have to do is manually deduct, if I can find it, here we go. We're going to manually deduct the withholding allowances. So for a semi-monthly pay period, she will have $175 deducted for each withholding, and she had 4. So we are going to deduct 4 times 175 to get down to her taxable pay for the percentage method. So that will be $700. So we'll subtract that $700 from her taxable pay. which brings it down to $1,474. Now we're going to take this figure over to the married and semi-monthly percentage table. Okay, let's scroll down to the tables now, and we need to find semi-monthly and go over to the married side. We know that her earnings were $1,474, so that falls between the $1,300 and the $3,781. So we are going to take the $1,474 and subtract out this first number, the $1,300, to get the excess over the $1,300. In this table, you're given the tax on the $1,300 already, the $80.80. So what we need to do is calculate the tax on the amount of our pay that went over $1,300. So we are going to multiply that excess by 12%. So let's go back over to our problem and look at that calculation. Okay, so here is the $1,474 taxable pay, and we will subtract the $1,300, and $174 is the excess over $1,300. Now that $174 is taxed at 12% according to the table, which is $20.88. Then we're going to add that $20.88 back to the tax that they gave us on the $1,300, the $80.80. So the total tax for Francine will be $101.68. Notice that that amount is pretty close to what we calculated up here in the wage bracket method. Now those are the methods for the pre-2020 W-4. If an employee already has this W-4 on file, they will continue to have their withholding calculated using this pre-2020 W-4. However, new employees will have to use the most current version of the W-4, and it is much more detailed than the pre-2020 W-4. So let's look at that one. Okay, on the current W-4, once again we have the marital status here, and of course the employee information. But unlike the pre-2020 form, this form has no place to report allowances. Instead, the taxpayer or employee is going to enter a lot more detailed information about their annual income. So in step 2, the employee is going to indicate if his household has multiple incomes or multiple jobs, if the employee has a second job, or if the employee is married filing jointly and the employee's spouse has a job, then this box here needs to be checked. Okay, down in step 3, if the employee is entitled to tax credits for dependents on their annual tax return, they're going to indicate here by entering $2,000 for children under age 17 and $500 for dependents who are 17 and older. Down in step 4, other income is indicated. So if the employee has maybe investment income or a large amount of interest income, that would be indicated here on line 4A. If the employee is entitled to deductions higher than the expected standard deduction on their annual federal tax return, then that is indicated on 4B. And if the employee wishes to have extra withholdings withheld each pay period, that's indicated on 4C. The purpose of the new form is to get a much more accurate withholding for employees. So let's take a look now at some examples of calculating federal withholdings using the current form. So we're going to first look at the wage bracket method, and then we'll cover the percentage method next. In our example, Maria files as married filing jointly on her tax return and earns weekly gross pay of $9.90. She makes a flexible spending contribution of $30 each pay period. She checked box 2C on the W-4 and entered $500 in step 3 of the form, and then she entered $2,000 on line 4A. We're going to have to take into account all of these things that are highlighted when figuring the federal withholding tax. As always, we're going to begin by calculating taxable pay. So first step is to deduct the $30 in flex spending deductions. So that brings our taxable pay down to $960. The fact that Maria checked box 2C just directs us to the correct column on the wage brackets. So let's go over quickly and take a look at the wage brackets used for the current W-4 forms. Notice that we still have the pay ranges over on the left. We have the marital status up above, but we have 2 columns under each marital status. Since Maria indicated on the W-4 that she had multiple incomes in her household, we're going to make sure and use the step 2 checkbox withholding column for her. Okay, now we'll address the other items. In steps 3 and 4 of the current W-4, there are items that will affect the taxable income used, and there are items that adjust the federal income tax withheld once it's calculated. So always address the items that affect the income first. So for example, it says she entered $2,000 on line 4A. So let's just look at line 4A here. It says other income not from jobs. So this might be from some kind of interest or investment income. Maria has reported an additional $2,000 of income for the year. So it's an annual figure, so we need to adjust it based on the number of pay periods. So she gets paid weekly, and there are 52 weeks in a year. 2,000 divided by 52 weekly pay periods gives us $38.46 of additional income. So we're going to add the $38.46 to the $960, and that will give us an adjusted wage amount for Maria of $998.46. Since this is the only adjustment to income she has, we can go right over to the wage brackets now and figure out what her federal withholding will be. So we need to remember that she is married and is paid on a weekly basis, and that her income is $998.46 each week. So let's move over to the wage brackets. All right, we're in the weekly section here. Now we need to scroll down and find the $998.46. Okay, that will be between the $995 and the $1,005. We remember that she did check box 2, and we will be under the married filing jointly column. So if we go over to the second column under the married filing joint column, then we see that her withholding is $87 a week. So let's go back over. We've got something else to address now. Okay, her withholding is 87, but remember here she had entered the $500 from step 3. And remember that is for a tax credit. So she gets a $500 annual tax credit for a dependent over the age of 17. So we are going to take that 500 and divide it by 52, just like we did the additional income. So 500 divided by 52 weeks is $9.62 per pay period in tax credits. So that's going to reduce her weekly withholding down to $77.38. You will treat the adjustments to the taxes and to the income the same way with the percentage method. Before we look at that method, let's take a look at a shortcut sheet that I've created to help you remember what to do with each adjustment. On the current W-4, you'll always be looking for the marital status and whether or not the employee checked box 2A, so you'll know which column to use. The percentage method has these columns as well. The step 3 for tax credits, remember it's a tax credit, so it results in a reduction in withholding tax. So you will divide whatever credit is listed here by the number of pay periods. So if the employee is paid weekly, you divide by 52. If they're paid monthly, you divide by 12, etc. Then deduct that amount from the withholding tax that you've gotten from either the wage brackets or the percentage method. In step 4A, if other income is reported, that's other income for the year, and you will divide by the pay periods and add that amount, since it's other income, add it to the taxable income to get an adjusted income amount. If there are deductions reported on 4B, you divide by the pay periods and then subtract that from the taxable income to get an adjusted taxable income. Any amount on 4C is just deducted from the withholding tax that you've calculated. So there are 2 adjustments to income. Those are always done first so you can get your adjusted income before you go over to the percentage tables or the wage brackets. Once you get your tax from those tables, you will adjust those by any tax credits, subtracting the tax credit, or either adding back for the additional withholding tax. Okay, now let's take a look at our example for the percentage method. This says that Julia files as single on her tax return and earns weekly gross pay of $550. She makes a 4% 401k retirement contribution each pay period. She did not check box 2C on the W-4 and entered $20 in step 4C. So the first thing we're going to do is calculate her taxable pay. So we'll take 4% of $550, which gives us $22 in our 401k deduction, and that's not taxable for federal income tax. So we subtract that, and her taxable income will be $528. Now let's make note of her adjustments. We'll have to remember that box 2C was not checked, and $20 was entered on step 4C. We can use our shortcut sheet to see what 4C is all about, and 4C is extra withholding tax. So we're going to add to the calculated withholding tax. So we can go ahead and see what our withholding tax will be. Remember, the employee is single, did not check box 2C, is paid weekly, and has taxable pay of $528. So let's go over to our percentage tables. So we have to make sure, first of all, that we are in the correct column on the correct pay period. She is paid weekly, and she did not check the box on step 2. So we will be using the standard withholding rate schedules for her. She is single, so we'll come down to the single table here. She had taxable pay of $528, which falls between $433 and $1,021. So first we're going to find the excess of her earnings over $433, because the tables have already calculated the tax on $433. We just need to calculate the tax on the excess over $433, and we're going to tax that at 12%. So let's look at that calculation. 528 less 433 from the table gives us $95 in excess earnings over 433, and those are taxed at 12%. So the tax on the $95 is $11.40. The table told us that the tax on the 433 is $19.20. So when we add those together, we have $30.60 in withholdings. But remember, she entered the $20 in step C of 4C, which was the additional withholdings. So when we add the additional withholdings, we get total withholdings of $50.60. I know it seems like there are a lot of steps to figuring the withholdings using the current form, but the key is to getting to know the steps in the process. So let's take a look at those. First, calculate your taxable pay based on the pay given and the voluntary deductions. So just take the gross pay and deduct out any 401k withholdings or flex and cafeteria withholdings. Next, make note of the lines completed on the W-4 by the employee and use the shortcut sheet to determine any additions or subtractions to income to get the adjusted taxable income. Those are listed in green on the shortcut sheet. So once you have your adjusted taxable income, go to either the wage brackets or the percentage tables. Make sure you're on the correct pay period, filing status, and column based on line 2C, and figure the employee's federal withholding. Then adjust the withholding based on the tax credits listed on line 3 or the extra withholdings listed on line 4C, and these will be listed in blue on your W-4 shortcut sheet.